Hello traders and welcome back to another episode of T2 SMC Trader. So if you are wondering why your entry is not working from a lower time frame, market structure shift, fair value gap trade is not going to hit your target profit from a very lower time frame, then you are at the right place. In this video, I will explain almost every PDRA, how you can use them so that your entry will be so precise and you will be able to trade some kind of perfect entries. Okay, at the same time we will explore the psychology behind the the trading strategy and the price action associated with it that you might encounter in the market from basic to advanced. Okay, that's not all. We will absolutely break down the key criteria and rules you need to execute winning trades with this simple concept. So traders, if that's something you are interested in, please give this video a thumbs up to show your support and subscribe to our channel if you are new. So let's get started. Here, first I would love to elaborate the 15-minute chart over here. This is the 15-minute chart, and if you see market was falling, I took a sell. Now it didn't hit my target for one tick actually. If I get stopped out over here, I will show you I have already taken my partial. So even if it hit my target, stop loss, I will be still profitable. I will explain everything later. I will show you the entries I have taken in this in this price action. So step by step, let's go to the video. Okay, I would love to use this 1-minute chart instead of this 15-minute chart. First, let me show you the every level over here I have marked. Okay, so this is the new week opening gap, Friday close, Sunday open, the consequent crossment of the new week opening gap. Okay, here this is my sell side liquidity. I need this chart for a little, so let me actually explain why it is important. This is the bullish order block. Price trade that bullish order block. I frame my trade from there. Okay, from that bullish order block. And why this was my liquidity? See, this low and that low, they are relatively equal lows. Okay, so when they are relatively equal lows, that was my target. I don't need that 15-minute chart anymore. Instead of that, I will just explain the price action over here, and if you watch until the end, I believe that you will understand why your setup is not working and how you should frame your trade. What is the reason behind that? What is the psychology is working over here, and what is the price action is actually here. Okay, the price action you need. So this is the London session started around 2 a.m. Newark local time. You can see market has traded the last fair value gap over here. This is the last fair value gap from 1 minute. Market has traded that. I wasn't here before 2 a.m. so I didn't know what happened. When I just came, I saw this big run which has closed below the new week opening gap. Okay, so I didn't participate anything. I didn't do just anything over here. Don't worry, I will show you the execution as well. But first, you have to learn why your entry is not working, but my one is working almost every time. Okay, so what is the problem? What problem you are facing over here? What is missing from your trading? Okay, then market went lower, made this entry fair value gap. Market has taken some buy side liquidity, market structure shift, entry fair value gap, last fair value gap. Price trade that entry fair value gap, went lower again, come back again to this new week opening gap. At the same time, when market went higher, another market structure shift, another entry fair value gap, another last fair value gap. Trade the entry fair value gap. At the same time, it has traded the new week opening gap low over here. New week opening gap low. After trading the new week opening gap low and the entry fair value gap from 1 minute chart, boom, market went lower. When market went lower, see this low and that low. They are relatively equal lows, and look at these two lows, how clean they are, a perfect double bottom. So the retail trader, they are seeing this as their entry opportunity to take buy because this area is not going to be broken. So this is the psychology. You have to find out your draw on liquidity first, and the draw on liquidity, you are going to mark them depending on that relatively equal lows or relatively equal highs. Okay, so double top or double bottom should be your draw on liquidity. After trading that after making this draw on liquidity, market went higher one more time. It has taken the buy side liquidity from 1 minute chart, tap to the new week opening gap, constant encroachment. Now it didn't reach until that new week opening gap. It was one tick below that new week opening gap, constant encroachment. Still, it traded the lower part of this new week opening gap. Look, nobody closed above the new week opening gap low. Now, why I am in 1 minute chart, not in 15-minute chart? The reason is I need an higher time frame level to frame my sell setup. I will show you there was buy setup as well, but why you should not take that buy setup. Okay, instead of that, why you should look for the sell setup. So please watch until the end. You have to be very patient until the end, and if you watch until the end, you will learn a lot. I promise you, brother. What you are going to do over here? No, you have nothing to do around that area because this is messy price action, no clean price. Market structure shift and immediate reaction from the fair value gap. There was nothing over here, so I didn't do anything around that area. Instead of that, I saw that market went lower. Then finally, it has made this relatively equal lows from both 15-minute chart and from 1 minute chart, right? From both of this area, this is your sell side liquidity. Then market went one more time higher. When market was going higher, I was seeing this is my buy side liquidity. At the same time, these lows are very clean. So here new week opening gap is going to decide, is it going to fall or is it going to go higher? Okay. If you don't have the new week opening gap, then you have to mark some kind of fair value gap from 15-minute chart. If you find out any bearish fair value gap over there, then you will believe that that bearish fair value gap is going to hold your price and sending it for the sell side liquidity. If you see the bearish fair value gap is broken, then you will look for the buy side liquidity because this is also the buy side liquidity from 15-minute chart. So look at this new week opening gap, how it is holding the price. The low, let me remove this a little bit. Just look at this reaction from the new week opening gap low. So I believe that you have no confusion that this new week opening gap is holding the price. So should you look for buy? Okay, so it hit my target profit and that is a profitable trade. I will show you the execution. Just give me some more times. This thing hold the price, then market is falling. Here is the part of the FOMO. When you saw, you are until now you know that market is going to fall because this new week opening gap is holding the price. So you should look for sell. But suddenly you saw that market is falling without any market structure shift, fair value gap trade, market is falling. So here the FOMO started to work. Oh man, am I going to miss the trade? Should I take that entry? Should I chase the price? Please don't do that. Wait for the perfect setup. Market is falling. If it has taken the sell side liquidity, you have nothing to do. So you will let it go. But if you see what happened over here, okay, market finally went lower, went higher one more time, lower, little consolidation, then went higher one more time until the order block. This is the order block because this is the highest up close body close candle which has traded this fair value gap, new week opening gap, the strongest fair value gap. So it has traded the strongest fair value gap and this is the highest up close body close candle. The opening of that highest up close body close candle is my order block. This is the mean threshold of that order block. Look at the reaction from that area over here. Okay, so it has been rejected from that order block and the mean threshold. But before happening this, what do you see? Market went little higher, went lower, take some liquidity. See this, all of this liquidity has taken there, made a swing high. Let me mark that. This is a swing high which has been shifted over there. So this is your market structure shift. Okay, so market structure shift, fair value gap. Let me mark the fair value gap. It has traded this fair value gap, an immediate reaction. Market just came within one candle, it came to this fair value gap, started to go higher. Are you going to take buy? As you were seeing, this is also a 22 YT model which is very famous in ICT concepts. So are you going to take that buy? Here the problem is you don't focus on the price action where market is going from your higher time frame. You are not focusing on that. From your higher time frame, you have this sell side liquidity. From your higher time frame, this new week opening gap is holding the price. You should not look for buy over here. But this is the part it is missing from your trading, and you are thinking that this setup is going to work because market has taken the liquidity, then market has made a swing high, which is valid for shifting market structure, went lower, left no liquidity, then boom, a very nice displacement, fair value gap trade, market is going higher for maybe this buy side liquidity or maybe some other buy side liquidity. This is absolutely wrong. Can market go for the buy side liquidity? Absolutely, it can go for the buy side liquidity, but in that type of situation you have nothing to do over here. The higher time frame is telling you, the new week opening gap is telling you that no, I'm not going higher, I'm sending the price lower. When new week opening gap is telling me that I'm sending the price lower, then I will start to look for liquidity from 15-minute chart. Do I have any liquidity from 15-minute chart? Yes, I have this very clean liquidity. See this liquidity. So all I will just look for sell. I am not going to look for buy. When I will look for sell, I will just skip this setup. This is not even a setup for me. I'm not seeing this as a setup. I will never notice this thing that market has made some kind of setup over here. Finally, market reached to that order block and the mean threshold, then market went lower. At the same time, here, if you look from a longer time or some kind of things over here as well, market has taken some buy side liquidity, market structure shift, fair value gap trade, market went lower. Why didn't take this entry? Because that was just, this market structure shift was not so clean to me. Okay, I wasn't so convinced about this market structure shift. At the same time, I didn't get any immediate reaction to this fair value gap. So when market has taken some buy side liquidity, gave me a market structure shift, this was the fair value gap, but this fair value gap didn't trade by 3 candle, so I didn't get immediate reaction to that fair value gap, so I didn't take the entry. But after doing this, market has made some unfilled fair value gap over here. This is the unfilled fair value gap which has been filled by that candle. So when it's filled over there, I will start to look for a breaker block. Okay, now market went higher, high, low, higher, high. What is that candle? The lowest down close body close candle. What is that? Your breaker block. Mark your breaker block. Then market went lower, closed below the breaker block, valid that breaker block as a valid breaker block. Okay, then market tap to this breaker block, then all of this price action I'm gonna explain. Okay, here I did a mistake. I have no shame to share that. I wasn't here when market has made the breaker block. I wasn't here, I was in the washroom. I'm sorry for that. I was not actually washroom, I was in a shower. Okay, so when I came back, I saw that market has already went too much lower, so near about this candle. Okay, I came here and I saw this candle. When I came, when I have seen this candle, I took an entry depending on, I just thinking that this is the order block. So after making the breaker block, market always make a order block. Okay, so I actually tried to mark that order block and I took an entry depending on that order block. I covered the order block high, and I got a stop out. Now let me actually show you the execution. So here I took a sell and I got stopped out over here, and I don't know. Okay, so my stop loss was just above that one. Okay, so I got stopped out over there. So let me remove this one, and then later I will show you the another execution. I got stopped out over here, a very small stop loss. Obviously, if I believe that this order block is going to hold the price, obviously my stop loss will be over there. But when I got stopped out over here and I saw this mohawk, see this mohawk, a very small run above the breaker block, I was very much confident about this breaker block, that this breaker block is going to hold the price. So I took re-entry over here. I covered the mohawk. I put my stop loss above the highest up close body close candle to that specific run. This one. Okay, I put my stop loss above that one. Then market went lower. When it went lower, it has made this order block. So here my mistake was, I was little hurry. Okay, I was in rush. That's why I take a small loss. To be honest, I have already made a lot of profit when I took that loss. It's not, I mean, sometimes shit happens. Okay, but that was, I was in rush, so I got punished. But later when I saw this thing and I saw this order block, I added one more over here. So let me now show you the entries over there. Here, this candle I took re-entry when I got stopped out. by that candle. When I got stopped out by that candle, I took re-entry to that candle. You will see the price over there. And when market come back again and just tap to this order block, see this order block over here, I added one more contract. So two contract, then I added one more contract. So this was my three contract entry. I took a partial around below this low, because above the extreme low, this is the only place where I should take the partial. So I took a partial over there, and then I closed my trade over here. So I believe that I should not, that was actually previous day's trading. I was in live, so that was the previous day's trading. Today I have just taken these two trade. One was stop out because of my rush. I just took entry to that order block, stopped out above the order block. Then I re-entry depending on that breaker block, covered that mohawk, re-entry, pyramid my trade to the order block. Okay, so let me now remove this one. So do you understand what was missing from your trading? You are looking for maybe this buy, but this buy is not, there is no reason to take the buy. You are missing the higher time frame context. So you have to put everything in 1 minute chart from 15 minute chart. If you can do that, it's gonna be very easy. Now let me explain the price action around that area, how it has been traded around that area. Finally, market has traded this breaker block perfectly around that area, made a mohawk, went lower, then made this order block, highest up close body close candle. So this is that order block line. Let me extend it little right, and this is the mean threshold of that order block. You can see then market retest the order block here, retest the mean threshold, and what is that? Last parallel gap from 1 minute chart. This is the last parallel gap. Look at the bodies, how beautifully it has been respected, that last parallel gap. It has traded the mean threshold of that breaker block one more time. My stop loss was just above this mohawk. When I saw this mohawk, my stop loss was just above this mohawk. First my stop loss was above this high, then I put my stop loss above the mohawk, and I was going to believe that this mohawk is not going to be traded one more time, one tick above the mohawk obviously. Then market has traded lot of time the order block and the mean threshold of the order block and the breaker block mean threshold. Okay, so 1-2 time mean threshold of the breaker block and lot of time the mean threshold of the order block. After trading that area, then finally market fall. When market fall, see this one, I have marked this one as a volume imbalance. Now when I have seen this volume imbalance, I have marked it, but at the same time, if you are not interested to mark that volume imbalance, no problem. See, from just cover that volume imbalance with the inversion parallel. So from here to here, just cover that and extend it to your right. You will see much better price action over here. Okay, so I actually didn't mark that one. Instead of that, I actually watching this volume imbalance, and I was believing that this type of volume imbalance is much more important than that type of volume imbalance. So you see these candles open and here it is overlapped. This candle closed over there, then price opened over here. So this is an volume imbalance. It's kind of little important to me, and I'm actually studying this volume balance differences. Price went lower to that volume balance, traded that volume balance lot of time. It can be traded a lot of time. After that, last time market tapped to the breaker block low, and then boom, market went lower, made this fair value gap unfilled. Why this unfilled fair value gap is important? If you see after trading the order block, market has made some unfilled fair value gap, then you should believe that market is going to hit your target profit. That means your sell side liquidity is going to be triggered. If it failed to make this type of things, then around the partial area, you have to take more partial. Simply, I took one partial here and I actually closed two contract over there. But if I didn't see that unfilled fair value gap, then I would close two contract over there and then I would hold one contract for the sell side liquidity. When I saw this, I was little confident, not little, actually too much confident that market is going to fall for the sell side liquidity. Okay. So then market has made this entry fair value gap and the last fair value gap, at the same time unfilled fair value gap, traded the entry fair value gap, fall again, trade this order block, see the highest up close body close candle which has traded this entry fair value gap. Extend it to your right. Let me show you. This is right, tick by tick. Okay, this is called precision. Tapped to this order block, fall again, make another unfilled fair value gap. Can you see the unfilled fair value gap over there? At the same time, market has taken the sell side liquidity. So the sell side liquidity from your 15-minute chart has been taken over here. So that was the entry, and that was the reason for taking that entry. Even in this type of price action, if you just believe your price action and if you know how to read the price action, if you can avoid this type of fake setup, this is, I will say, this is the fake setup. If you can put all the context I have given you here, for example the liquidity or the bias from your high time frame, then the fair value gap or the some kind of a strongest fair value gap from your high time frame, if you can put them all in all one place, I believe that you will be able to trade. Even in this type of worst situation, you will be able to trade this market. I was trying to make it simpler. If you think it's a little complicated, don't forget to ask me your doubt to the comment box, and if you like it, don't let me know that it was helpful or insightful for you guys. So that's all for this video. I hope that it will be little insightful for all of you. So until the next video, cheers.